Okay, good morning, everybody. My name is Mark Hodge, head coach at Rockwell Trading. Off to a little bit of a late start, had some complications with one of the streaming tools that we use here, but I'm still here to share with you what's happening in the markets today. It's Wednesday, November 3rd, and of course, we always do this video in 15 minutes or less to kickstart your trading day. So let's go ahead and let's take a look at the charts here. And gosh, can this move higher be stopped? So the S&P yesterday closing higher again, NASDAQ closing higher again, Dow closing higher again. The major indices up 0.4% across the board yesterday. Now the S&P's finished higher 13 out of the last 15 trading days. So what a day for the markets. Just this rally continues, and it's doesn't look like it's well, I was going to say it doesn't look like it's stopping anytime soon. However, there is some big news today and this week. So let's talk about the Fed. So it is Fed Day here, and this could put a little kink in the S&P's plans. We'll see. We'll see. So the FOMC statement is going to be released at 2 p.m. We have the Fed press conference released at 2:30 p.m. And investors are really going to be keying in on wording of today's statement. And also in this press conference, anything that Fed Chair Jerome Powell might be hinting at when it comes to a timeline on the reduction of its bond buying program, but also any clues on when the Fed will raise rates. So there's no surprises here when it comes to raising rates. The Fed is not going to raise rates this Fed meeting, but it's really all about the wording or with the bond tapering. Are they going to give a schedule for when they start and when they end, how much they'll be tapering each month, slowing down that stimulus. And then also with interest rates, so is that going to be something that gets pushed up a little sooner? That's to be seen. If we take a look at the Fedwatch tool by the CME Group, we see here that this is the probability based on Fed funds futures and trading. This is the probability that the target rate or the rates will stay the same and be as expected. And so basically, it's 100% certain that the Fed will not raise rates with this meeting. And we could go to the December 15th meeting, and we see now that it's 95.6% certain that they'll stay the same and a probability of 4.4% that they'll hike them. But that just shows that, yes, traders still anticipate for the next couple of meetings that there will be no changes. Here, 93.3% that they will stay the same in the January meeting and the March meeting. We see that numbers start to shift a little bit. Traders expect that 79.1% probability that rates will stay the same at the March meeting. And this is still really high here. May 4th, we see that it shifts a little bit more, 65% probability that rates will stay the same. A quarter point hike, 30% probability, higher than that, probability real low. But this is where it gets a little interesting. Here with the June 15th meeting, traders are anticipating that the Fed will raise rates, and this is a little sooner than the Fed anticipates, at least at this point. We could look at the dot plot, and I mean this is where we'll find more today. This is going into today's session, but we see here that most of the market participant, the Fed participants, they expect that rates will stay the same or be raised in 2022, right? So here in 2021, everybody expects them to stay the same, and a majority expect it to stay the same with 2022, with some members starting to see a rate increase. So 2023 right now is where everybody expects that's the Fed, where they project a rate increase. So end of 2022, possibly 2023 is definitely what's the target here. But as shown, traders anticipate that this will happen sooner. We'll see. We'll see what happens. I mean, this is where today the Fed will release their statement, and there might be hints at interest rate hikes down the road. But again, the wording and tapering is really going to be the key focus. Then we have the press conference at 2:30. So big day for the Fed. But we could also take a look at some other news that was released this morning. ADP Non-Farm employment numbers, they came out. The actual was 571,000 jobs added in October. This is compared to a 400,000 forecast, so better than expected, higher than expected. Also higher than last month's September. This was revised from 568 down to 523, but still higher. And this is the highest increase since June. So jobs are starting to look a little better, which is good for the economy. But that's also something that the Fed's paying attention to. And if they're seeing that even more jobs are adding, there could be a little more pressure with that Fed, the tapering, and also raising rates at some point. The biggie, though, is aside from today's press conference and statement, is Friday's jobs report, which consists of average hourly earnings, non-farm employment numbers, and also the unemployment rate. So today's just kind of a preview here with ADP non-farm employment numbers, but Friday's the biggie when it comes to jobs. So the Fed. The Fed is in the spotlight for today. And right now, futures pointing to a mixed start. If we look at the E-mini S&P, E-mini S&P has really been trading in a smaller range here overnight, down just a little bit. NASDAQ slightly higher, Dow slightly lower. So a little bit of a mixed start with the NASDAQ leading the way, following the rally and the record highs that we saw yesterday, with new records in the S&P, in the Dow, and also the NASDAQ. So let's look at a few market movers here. Let's take a look at Lyft. So Lyft was up 13% in pre-market trading, now up 14.5%, so even higher. Look at this chart here. This is a pretty big, let me reset it. This is just a big jump here, real nice range here. Support solid around $44, $45, jump to almost $52. So Lyft had an unexpected earnings beat. They reported earnings of 5 cents a share versus a 3-cent loss that was expected. Revenue was also higher with higher rider demand and higher prices. So Lyft getting a nice rally here, nice push higher in pre-market trading as we approach the open. Let's look at another one that isn't doing as hot. Zillow just getting hammered yesterday. Zillow down 10% here, finding some support around 85, but pre-market down to 73.64, down 15%. This loss here, this drop pre-market, is tied to earnings, but specifically, they announced that it will close their home flipping business. So this was a big part of the revenue. The decision comes after announcing that the algorithm used to buy and sell houses isn't working as intended. So they're having some tough times over at Zillow, and this is a pretty big loss. I mean, counting yesterday's drop as well, Zillow down 25% in a day. That's pretty big. They actually reported an unexpected loss and lower revenue as well. So just a tough earnings report for Zillow, and traders are not liking that. On a positive note, we can take a look at CVS Health. So CVS up 2.5%. Look at this. Is this record highs for CVS? No, not quite. Looks like CVS made records in 2015, but highs for the year and highs that we haven't seen since 2016. So still an impressive move. CVS jumping higher. Now, they reported earnings that were 19 cents better than expected, also reporting better revenue, helped out by increased COVID testing and vaccination demand at their locations. So CVS getting a nice little boost pre-market. Let's look at Activision, Blizzard Activision, ATVI. ATVI taking a bit of a hit pre-market. Look at this. Trading back at lows not seen since May of 2020. So Activision, after finding some nice support here, getting hit, they getting hammered after announcing that the launch of two popular games that were expected will be delayed, and they also expect weaker holiday numbers. So that's not good for any business. ATVI did report better than expected earnings, beating earnings by 2 cents, but that announcement, the delay in those two video games, and also expecting lower holiday sales, that's hurting the stock, and big drop for ATVI. Let's look at Camping World, one that we've traded a lot here. Camping World, well, I could get rid of this. This was from a previous coffee with Marcus. But you can see there was nice support here in Camping World. This 36 level just keeps holding up, and now with an earnings report, better than expected earnings, 6.8% higher, trading in this upper range here. Just a nice stock that's just staying in these nice ranges. So Camping World, they reported better than expected earnings and revenue, and because of that, up about 7% pre-market. Now I have to look at Bed Bath and Beyond. BBBY is the ticker. Look at this craziness. So this one's been all over the place. Meme stock trading took a big hit on earnings and was just, trading down at these lows. Lows not seen since September 2020. And then overnight, the stock's up 57%. So why the big jump? Well, they are rocketing higher after announcing a partnership with Kroger. We could look at Kroger. KR is the ticker. Kroger up 1.5%. So a little boost there for Kroger. Huge move with BBBY. But the big part of this rally is likely due to short covering. So Bed Bath and Beyond is one of the heaviest shorted stocks. I believe it's in the top 50 out of stocks traded on U.S. exchanges being shorted, and there's a pretty big short float. So that positive news with the partnership with Kroger driving stocks higher overnight, but then people covering their shorts, that led to a higher increase. And so this thing's just a big pre-market. It's up 57%. Big move there. So those are some movers for the day. A few things to keep an eye on. We have Cigna reporting tomorrow, Wayfair reporting tomorrow, Penn National Gaming reporting tomorrow, Uber, Airbnb, Pinterest, Dropbox, Square, and Rocket. So a few names to keep an eye on with earnings coming up tomorrow. And again, the big day today for the Fed. It's all about the Fed. 2 o'clock and 2:30 p.m. Eastern times are the time to watch. And we have Friday's jobs report. So still getting some earnings numbers. Earnings are in the spotlight, but again, today is going to be all about the Fed. So that's going to do it for today's stock market update. I hope you liked the video, even though we started a little delayed here. If you liked it, give it a thumbs up. We'll see you tomorrow. And until then, happy trading, everybody.